Thanks, Craig, for the intro, and hello everyone that's joined this morning. So yeah, we'll do just some intros for the three of us, just so you can kind of get a bit of a background. And I see it's looks like a relatively small group, so I think we're definitely wanting to kind of make this a bit interactive and kind of engaging. I think it's really interesting time for DeFi. There's a lot going on in the space, and so yeah, it'll be good to kind of engage with everyone and see what's drawn people to this session in particular, and so we can kind of keep it open like that. So my name's Ben Samaroo. I'm the CEO and co-founder of DeFi Ventures, and Cong and Ken are members of the company as well. My background, I started my career as a securities lawyer. So I worked in capital markets, actually mostly in oil and gas before I moved into tech a number of years ago, and have found kind of my passion in fintech and in crypto. And so have kind of transitioned out of legal roles more into kind of onto the commercial side with a number of different crypto businesses, and really I think it's I think even going back to 2017 when there was a sort of this boom in fintech in Canada, and seeing how the industry kind of reacts to that, whether it's on industry side, regulation, et cetera. I think there's a lot of interesting things, and now I don't think anyone could have foreseen what's happened with technology and how it interacts with finance. That's really what's happening in DeFi. I think it's really incredible. Lots of opportunity and lots of problems to solve. So that's really what we're here to talk about today. I'll pass it off to Cong to give a little bit of background about himself.
Hi, I'm Cong Lee. As Ben mentioned, we've been in the space for a while. My background is in tech, and I'm the CTO and co-founder of DeFi Ventures. I met Ben at Galaxy Digital when that was our last startup back in the ICO days. So we've gone back in terms of crypto back a long way. And we recently got together and started DeFi Ventures. So I'm more on the tech side. So any question my way? Over you, Ken.
Hey guys, I'm Ken. I'm the head of product and community over at DeFi Ventures, and I've been in the space for maybe about like 5-6 years now. I'm traditionally a growth marketer, but falling in love with the crypto space, and especially in DeFi, which I've been in since about like a year or two now. It's really interested me to see how DeFi has like grown and really just like taken up such a different mantle in terms of finance, and like showing us different ways and how we can really like expand the finance community, and how we can find different protocols to like earn and make money using cryptocurrency. So that really interested me, and jumping in the team with Ben and Cong has been a really awesome time.
Right on. Thanks Cong and Ken. I'm just playing around. I haven't used this platform before, but I see there's, I think we actually have quite a decent number of people that have joined us. I was looking at the wrong panel, but I just started a poll, just kind of curious to see how many people have interacted with or used DeFi. For anybody that's kind of on their computer and is able to respond to that poll, that would be awesome. I'll continue on, but we'll throw in some poll questions just throughout, as I think part of any early technology is really just kind of trying to understand where the problems lie. I think we'll talk about what we've seen and identified, but it would be good to get a sense of kind of where the audience sits in terms of their knowledge and kind of comfort level. So I'm hoping everyone can see my screen. We've gone over who we are. So we'll talk a little bit about what is DeFi, even before we kind of get into accessibility, efficiency, and transparency. As you can tell from the title of the session, it is decentralized finance. So at a very high level, it's financial products or services without a sort of centralized intermediary. So what one I would say sort of easier to understand example is decentralized or peer-to-peer lending, and so that's one use case that's been around since really the start of DeFi, and has gained a lot of traction. I think it's something that's understandable to people, whether you're sort of you've been in the crypto or digital asset space for a long time, or you haven't. So that's something that's got a lot of traction in DeFi. But again, going back to kind of the really high level, it is financial products without intermediaries. So there's, as you can imagine, there's a lot of challenges that come along with that. But the accessibility piece is something that has been part of the movement behind crypto, going back to the creation of Bitcoin around something that's decentralized and not owned by or controlled by sort of one or a few powerful institutions. And so I think the accessibility aspect is something that DeFi really brings to the table. On the efficiency side, I think that everybody's, or I'm sure most people here have experienced firsthand the problems with some financial institutions, whether it's banks or transfer agents, or not to single anyone out, but I think there's a lot of things in the current financial system that have a lot where there's a lot of sort of slowdown and inefficiencies, and in some cases, obviously, those are part of the process to ensure compliance and checks and balances. And what we're seeing with smart contracts is ways to streamline that process, still have the checks and balances, and really at the end of the day, better efficiency leads to lower costs, and then more kind of left over for the participants in the system. So a really key point of what DeFi has to offer. And at an early stage like this, smart contracts have been around for a long time, and there've been a lot of assets that have gone in and out of these smart contracts, but still it's a big risk. Really is making sure that smart contracts are audited properly and vetted, and really that's sort of the stage that we're at in DeFi. Is there's a lot of technology talent that's focused on auditing and checking these smart contracts so that more and more people can be onboarded into this new financial system. Transparency is the last one, and this is something that really goes back to the core of blockchain technology, and so it's something that DeFi brings to the table in a number of different ways. So it really comes down to these three, kind of overarching principles that are driving people into DeFi rather than sort of staying solely within the traditional financial system. Let's see if I can check how many people have responded to the poll. Curious. Okay, it's not working.
Healthy split. It's about 11 people with a yes and people with a no.
Okay, great. We should, Ken, do you want to throw in the next question, maybe around, what types of functions people have been using for those that have? That would be interesting to see.
Yeah, for sure.
Awesome, thanks. All right, so yeah, I'll talk a little bit more about what DeFi allows for. So obviously that's good to know what the split is of people kind of in the audience. About half have used DeFi, and I think we'll drill down a little bit more on what particular applications people are using, and then the other half, I'm supposing are sort of interested or have been looking at the space. So that's really good to know. I think it's, as I mentioned earlier, it's very, like, our view, kind of as a company and me personally, is that this is the very, 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 we haven't even started the first inning of DeFi, basically. I think we saw a big sort of run up in terms of usage of DeFi starting from summer last year and really continuing up to now. And we really feel that this is 2000, maybe 2015 for Bitcoin, that type of timeline. So there's a lot to still come, and a lot of really good applications that are being built in the space. So around ownership, DeFi, if you compare a centralized exchange for crypto assets to a decentralized exchange, I think that's a good example to kind of illustrate the custody aspect. So with a centralized exchange like a Coinbase, for example, and I just bring that name up because it's one that everyone's familiar with after their massive IPO. So if you buy assets with Coinbase, they hold assets within the company, and then when somebody comes onboards onto Coinbase, they custody the assets when you send your Canadian dollars or your US dollars to them. And so there's pros and cons of that, but at the end of the day, what that means is they have control of the asset. And so if something were to happen to that exchange, then those assets are at risk. With regulated with regulated institutions like Coinbase, obviously those risks are mitigated, and that's what the Canadian regulators are dealing with now, as I'm sure many of you know, and I think I see a couple of people from the maybe a couple of regulators in the audience potentially. That is what they're facing with, really trying to make sure that exchanges or crypto asset trading platforms, as they call them, are coming into kind of the regulatory purview and having the right sort of protections in place to mitigate that risk of what happens if something were to happen to the company and then client assets are held with the exchange itself. And we've seen that in the past with some Canadian exchanges with some pretty catastrophic results. And so that's sort of what we're moving to on the Canadian side. So in DeFi, you hook up your wallets that you own the private keys of, you have control, ownership, and custody of, and then you interact directly with the protocols that facilitate transfers in the example of a decentralized exchange. So really, there's no intermediary that's part of the transaction. So again, there's pros and cons of that, and the pro that we're talking about really is around kind of full ownership and not taking the risk of handing it over to a third party. Maybe I'll just so I'm not blabbing along around interoperability. Cong, do you want to share some thoughts on that?
Yeah, I mean, with the wave of financial application that's coming online, we're seeing a lot of people build in various exchanges, portfolio management, and derivative and trading platform. So that's one area that it's exciting and stuff coming. And as you can imagine, blockchain being the baseline, people are building pieces like Legos and attaching them on top of the infrastructure that is now Ethereum is the predominant network that is. It's not, the war hasn't been won yet, but it looks like Ethereum is the one that's going to be moving forward, and people are building on top of it. And on the protocol side, we've seen Aave and Compound and Uniswap as the three sort of prominent protocols that are now launching on top of the ecosystem. And the next slide will give you a higher level of the magnitude in which the space is moving in.
Great, thanks. So this paints a little bit of a picture of the size and scale of DeFi right now. So some numbers for you to look at, but just to something that paints the picture a bit. In addition to this is Uniswap, which is one of the most popular decentralized exchanges. Uniswap does about the same volume as Coinbase does on a daily basis. So I think that's a really kind of staggering fact, and also just thinking about how well Coinbase has done in terms of simplifying access to crypto, and what they've done in terms of acquiring users over the number of years that they've been in business, and with Uniswap starting very recently and sort of getting up to those volume numbers, it shows where the puck is moving in terms of what users that are interacting with these assets want, and it really comes back to these three principles, and that's why so much volume and activity is happening on decentralized exchanges, and then like some of the borrowing and lending protocols and others that Cong had mentioned.
And it's really interesting to see, because Uniswap isn't it's a little harder to get on. Like you have to own your own wallet, you have to send it to your wallet, you have to be able to interact with with Web3 to trade on it. So it's a bit harder to use than Coinbase. So to see so much volume coming through at such early days has been really interesting and exciting to see for DeFi, to see how much interest there really is in a platform like this.
So here's an illustration of the number of Ethereum addresses interacting with DeFi protocols. So this is pretty on par with the growth of DeFi in general. There's a few different metrics that you'll see in DeFi. Wallet addresses, I think, is a pretty useful one. Obviously, there's some other metrics like TVL, which is total. I don't know if you have that here. Yeah, total value locked, which is basically around how much assets people are committing into these various DeFi protocols to earn interest or yield on them. So that's really kind of where what the trajectories look like across all those different metrics. So Ken has been a DeFi user, I think, for definitely for longer than I have. I'm not sure about Cong. My sort of story with getting into DeFi was, I've been in crypto since 2016 and have done a bunch of different stuff, like on the professionally, and then personally in terms of investing, including having wallets hacked and losing lots of money and making a little bit and then losing more, and and the typical story, I think, for a lot of people. With DeFi, the first time I actually heard, going back to 2017, there was talk of there were decentralized exchanges. It just wasn't at this scale, and other decentralized products. But really, the sort of attention to DeFi started in summer of 2020, and I had somebody call me up and tell me that they were looking to do an ICO, and it had to do with DeFi. And so the moment I for those of you that have been in the crypto space for long enough, you'll probably have the same reaction that I did, which was I had the Twilight Zone moment where I was like, who's talking about doing ICOs? It's 2020. And so that sort of put me off of DeFi for a little bit. I just didn't, that was the first sort of flash that I had of it. So didn't look at it for a couple months. And then, Cong and our other co-founder, Dean, kind of kept poking me and sort of saying, this is something that we need to look at seriously. And then we've been involved since then. But I know Ken, you've been using it for a long time. Like what draws you into DeFi? Like what are you finding are the most useful applications and that you've been using?
So for me, what drew me in was kind of similar to you. Like people started pinging me and talking to me about DeFi early in 2020 and 2019. Just telling me about it and telling me kind of to jump in because it's kind of like this new protocol, and seeing something like Uniswap take off, where like before in like 2017 and 2016 it was like Ether Delta, and we were trading with that, and it was like so easy to get lost in that, and then to see kind of like a Ether Delta 3.0 with Uniswap, and seeing how effective it was, and seeing how like liquidity pools were being managed, and just like this explosion of new coins and new protocols onto the platform. That was really exciting for me, because we didn't have that in like 2017 and 2018. We didn't have like these protocols where like you could like stake your money and get a constant interest back. And so it really opened up to me different ways to really use like Ethereum, at least on my level. I never used Ethereum like that when I was trading back in 2017. So to see it grow to that was really exciting. And then it kind of like lends to the few top protocols that I've personally used. Obviously, Uniswap is one of the biggest ones. And it was really exciting to see this because it's a decentralized exchange. It allows anyone to trade, and it allows you to trade from your own wallet. And so that was really big for me, because I never really liked holding funds in centralized exchanges. Sometimes you don't know if like you're going to be able to pull out your money if the centralized exchange puts a freeze or whatever on it. So owning my own wallet and being able to trade from that wallet privately is huge for me. And then the one thing that really interested me when Uniswap came along was these commission fees that you could get by being a liquidity provider, and really understanding. So when you're a liquidity provider, what you do is you're putting up whatever ERC20 token. So let's say if we're talking about Compound, which you can buy, it's backed say by ETH. And you would put those 50-50 into a pool, and by doing so you allow other people to trade without pretty much needing an order book to fulfill it, and that allows you to really just be able to trade on the go and not even have to actually worry about someone buying it, because there's already a pool to buy it for you. And so being able to earn transaction fees on that, and then seeing the volume grow and seeing how much money you can make, even just being a liquidity provider, was really interesting for me, because it is quite a new take on. It was a new take on how you would make money, and so that was really interesting for me, and why I jumped into Uniswap. And then as I jumped more into the platforms, I jumped into Compound. So this was really cool for me because you didn't even need to be staking in Ethereum or Bitcoin. Even if you had a stable coin like USD, USDT or USDC, you could still earn interest off it by lending into this protocol. So I thought that was a really good hedge on safety and on risk management. If I still wanted to be in the crypto space and involved in it, but I wanted a hedge on safety and wanted to be in a stable coin, being in Compound was really awesome to be able to just earn interest rate on this money and earn better interest rate than I've ever had at a bank. So that was really cool to experience, and to be one of like the first people staking in those platforms, and then getting a bit of a better interest rate, because it does change based on how many people are locked into the protocol. Being a bit of ahead of the curve, you could gain a bit more through those protocols. How about you guys? What kind of protocols did you guys jump into when you started DeFi?
Yeah, just jump on that. On the tech side, we saw Ether, like you mentioned, Ether Delta was big back during the ISO days, and I don't think anyone really realized the magnitude in which the space would grow. And 0x was developing at the same time, and today, I mean, 0x is the de facto standard for the network, right, on settling the transaction. So yeah, I think the game changer for me was Uniswap when they came out, and the protocol allowed for a liquidity pool and essentially allowing anyone to create applications and creating their own pool on the network. That was the game. That was the big moment for me.
Being kind of an early DeFi adopter, Ken, what would you say has has changed sort of from the early days that you first staked your assets till now?
I think before it was just a wild west, and it was there was a lot more risk involved being an early stage user. So you had the advantage of getting these like ridiculous APYs on your staking investments and things like that, but you also ran the risk because you were like the first time beta testers, or like you were the first time users of this, and so there was a really delicate balance between that, and there was a lot of new protocols that had exploits and hacks and things like that, and so that was the early stages. And as we got further and further along into DeFi, we started to see these, especially the big ones like Compound and Aave, start to become more secure. They started to have audits done on them, constantly improving their smart contract code, and really just like amping up the security that is allowed. And even just like seeing like insurance starting to pop up in DeFi has been really reassuring. So I've seen the space go from like this wild west where people are really just trying to be the first in a lot of these protocols, to it becoming like a stable investment for a lot of users, and one that's audited and backed by insurance. So that's been really, really interesting. And it's also been really interesting to see that even at the lower APYs, a lot of people have really locked in a lot of money into this. And so you start to see a lot of traders, especially when you're watching some of the bigger wallets. I like watching wallets and seeing like, if this person has like $2 million or $3 million in their Ethereum wallet, what are they doing with it? You start to see that a lot of these bigger users, a lot of them lock into their funds in Compound, because if you're locking in like a few $1 million into their protocol and gaining like a 2% APY, and it's just constant, and you know that it's secure, you're getting some really good returns on that. And so there's really been like this explosion in TVL, and people just like starting to trust these secure, I guess, protocols, and seeing them start to grow.
Great, thanks, Ken. See some really good questions in the chat. So maybe we can so we put some kind of responses in text, but we can just talk about these a little bit just to open it up. So Salima was asking, what are DeFi protocols? Just to kind of clarify what that is. So Cong or Ken, if you want to jump in with a response there, so we can kind of unpack that a little bit more.
Go ahead, Ken.
Yeah, so I think the best example would probably be something like Compound, where it's a place where a user can come in, and they can lend their, say, Ethereum or even USDT, and in return they can get interest back for that staking of their stable coin or their Ethereum. So they've built out the smart contract, they built out their website, and they've made it really easy for users to just input their money and let it stay there, and then earn interest back on it, while other people are borrowing against their collateral. So what you can also do is, if you've lent, say, $1,000 in USDC, you can borrow against that collateral and have 50% back. So you can borrow $500 of Ethereum or Uniswap. So it allows you to gain interest rate on your loans, but it also allows you to borrow from that pool. So that's just like one example. So there are many like different other protocols. Even Uniswap is a protocol of how people can exchange on a decentralized exchange. So it's all these different people who have made like smart contracts and websites that allow you to interact with them with your personal wallet, and then having like these different ways to either stake your ERC20 tokens or exchange them.
And so Cong, thanks, Ken. So that's really helpful. And then just from the technical side, I see another question, and this also ties into the initial question of what's a DeFi protocol. So just the difference between a DeFi protocol and an app like like Coinbase or Celsius.
Yeah. So essentially, the protocol itself are a set of smart contract that gets deployed by I guess Uniswap foundations or company or tech. I guess it's once it's deployed on the Ethereum network, anyone can interact with it, and that's the beauty of public blockchains, right? And so, but in order to interact with it, there's a set of rules, and those are the rules are the protocols. Whereas applications, they are basically UI and user interface that are built on top of your browsers or even mobile, and they interact directly with the smart contract. So that's different between a protocol and a platform application.
Awesome, thanks, Cong. And then Bev had a question around regulation. So Coinbase is regulated in, I think, every state in the U.S. or almost every state, and so that would be correct to say that they're a licensed crypto trading platform. Uniswap, Compound, and MakerDAO, not as far as we know. I think the challenge with regulation of something that isn't owned or sort of located in one jurisdiction is something that's I think fairly new, relatively new for a lot of regulators, and so that's something that sort of remains to be seen how regulation works around that, because again, there's no with Uniswap, for instance, there's no head office or company or even traditional ownership structure. It's basically, as Cong described, a set of smart contracts that enables this peer-to-peer exchange, essentially, without anybody sitting in the middle of it, and it's all run through smart contracts and technology. So it remains to be seen. I know the SEC commissioner had come out with a statement a few months ago, or talking around how they were recommending that there be sort of a moratorium on regulation in DeFi for a number of years, so that the technology can evolve before regulation comes in and sort of narrows it down a path. Remains to be seen whether that will actually happen or not, and different places are dealing with it in different ways, but it is I would say quite a novel area, and presents a bunch of challenges and opportunities. And it all comes down to me, it all comes down to, we had these financial products that had intermediaries that are regulated, and they're regulated because you need to make sure that they're not doing anything funny, basically, and that they're accountable. And then now, instead of the intermediaries, it's smart contracts. And so where I see it going personally is really around audit of smart contracts and the technology that's driving decentralized finance. And so that we've seen that happen in a couple of other areas, but I really see that as where this goes in terms of regulation, so that you can see that the contracts have been audited and vetted, and have gone through some sort of potentially a regulatory process to ensure that no user funds are at risk, or the risk is mitigated. Just looking at some other questions here. Loving the questions, everyone. So please keep those up. Opportunities for innovation. Thanks, Dan. Yeah, I think auditing, and Cong can jump in on this, just as I was saying just now, I think auditing is definitely a big opportunity. What do you think, Cong, around innovation with auditing? Do you see kind of opportunities there, or is it? Yeah, what does that look like from your perspective?
It doesn't sound sexy, but definitely that's one area that is really missing. And as you mentioned earlier, as regulation comes in, the regulator are going to demand auditings and reportings. So definitely that's one area that's, you know, as not as sexy as it sounds, but that's what innovation is how we audit the smart contract, how do we audit all the transaction and bring that into the fiat where, you know, the transaction money and consolidate and all the accounting that that goes behind the scene.
Yeah, thanks. That it makes sense. And I think the other, you know, there's a bunch of other considerations that come in. So auditing, I think there's opportunities around compliance. This is a new, you know, really kind of new world. So but you know, obviously you're going to have the same, like, you know, AML type laws and requirements that come into place. And so I think there's, you know, there's there are some products out there that are looking to solve that. And then, you know, again, as we going back to the borrowing and lending, or let's just say the lending example, really just to break that down, and I, you know, apologize if this is just kind of laboring the point, but just, I know that the knowledge level is kind of, there's a range in the audience. So really the lending in DeFi is basically, so if we go back to the traditional world, I have my 100 Canadian dollars, I put it into CIBC and I earn, you know, 0.2 or 0.3% on it. And what happens behind the scenes is, you know, CIBC has all these deposits from clients like me, and then they, you know, they use those funds, like they'll leverage those funds to, you know, to lend out themselves to earn interest on. And so what DeFi does essentially is it takes out CIBC and makes it so instead of having this, you know, this middleman that is paying me a low interest rate and then lending it out at a higher interest rate, it's kind of connecting me and then the person that's that is looking to borrow on the other side of CIBC. So it's, from that perspective, it's super compelling, and that's exactly why there's been so much activity that's drawn into this, like Ken has been talking about. Let's just see here. Lots of great. Oh yeah, go ahead, Ken.
Yeah, I think I'm just seeing talking about insurance.
Yeah.
So there's a few players in the market. Probably the biggest one being Nexus Mutual. But what these insurance for some of these protocols, it really is the people who are working with Nexus Mutual and cover primarily those two. But what they're doing is they're working with them to essentially cover users when there's a smart contract failure, or basically when there's an unintended use of code, if there's an exploit on the smart contract. So there are some protocols that do work with Nexus Mutual, who are black-backed underwriters, and so they provide that insurance so that if ever there was some type of if there ever was some type of failure in the smart contract, they would cover the users who got impacted by that. So the insurance space is really fresh. It's really new. There have been other companies starting to pop up or coins starting to pop up trying to do this, but really the ones who have actually been able to apply it and have been efficient with it has been Nexus and Cover. So those are really interesting. If you wanted to learn more, really interesting to jump into those and see how they've tackled insurance on that end.
Yeah, it is interesting, and I see a lot of the questions coming in are around, you know, risk management, insurance regulation, and so it's great to keep these questions coming. I see one from Imad on risk management for lending out funds. So I think the insurance aspect ties into that. There's also credit risk score applications that are being built or have been built that really try and help you, you know, assess counterparty risk, basically. So again, you're taking CIBC out of the picture here, but you know what CIBC would do would be, you know, like assess the credit risk score of the borrower. And so there's ways that are there's technology that's being developed around that and around going back to kind of the innovation question that Dan had. That's, you know, that is really, to me, it's anything that any protections or, you know, benefits that exist in centralized finance or in traditional finance that go away when you go to decentralized finance, like having a bit of that, having that security around kind of counterparty risk. Because if you're dealing with CIBC, obviously you're pretty safe. Anything that solves for that is, I would say, an opportunity for innovation for sure. So we talked about insurance, just kind of going through a few more of these questions here. Dr. Clements, isn't this an enforcement nightmare for the regulator? Even with smart contract audits, how can the regulator possibly keep up with new protocols? I don't know. I think it is. I think it's a really challenging area to regulate, and I will be very interested to see how this starts to kind of unfold across the globe. Maybe I'll leave it at that. I think it's going to be super interesting. But I would tend to agree with you. It's going to be tough. And to me, a solution would be, and I know like within Canada, there's definitely been, I wouldn't say a move towards this, but you definitely see people within the regulators with a lot more kind of technical aptitude. Like I know from personal experience dealing with a few that you'll talk to individuals that have high technical knowledge, and I think that is very useful. And I could see sort of regulators, whether it's in Canada or the US or elsewhere, really kind of dedicating more resources or hiring, basically, engineering talent to help, really help understand what the risks and security is around these smart contracts. Because it basically, again, it's a shift from an institution doing the checks and balances to technology. So, the old kind of traditional mode of having people look through kind of policies and procedures and things like that to make sure that those people are in check. Now that means less. Now, I mean, it's still important, but now it's going to be like, how do we vet these smart contracts and figure out if this is secure? Isn't the sorry, not answering these in order here. Let's try and keep them in order, actually, just so we're.
So I think regulation there. So Nuno brought up a really good point, and that's that the biggest impediment to wider DeFi adoption is UX. And I think we tackle this on the next slide, but that's definitely the case. And I think that's where a spot in innovation there's going to be a big one where if you're able to really just like make it easier for users to understand and to stake their investments in a guided and a simple fashion, I think that's where we can start to see scale aggressively. And that doesn't have to be with all of the protocols, like where they're new and then there's a lot of risk involved, but really just taking advantage of the audited, already proven protocols that are in DeFi, interacting them with a better, simpler UI. I definitely think that's where we can scale and grow and start to appeal to more of the CeFi users who won't feel safe with just a MetaMask and DeFi Legos. So I definitely think that's a good point.
Yeah, and really that's that, as Ken said, that it's really the biggest impediment. It's right now definitely as we mentioned, is really early stages for DeFi, and so it's a lot of it's a lot of complexity, and people get lost in it. I get lost in it all the time, and it's there's a lot of room for improvement there. So really, that's our company, DeFi Ventures, is solving for that. We're really building something that makes it a lot easier to kind of interact with DeFi and understand DeFi. There's a big education component, and so there, you're bang on. There are there are big opportunities there, and it's the whole kind of concept around this is democratized access to finance. And so if you don't have user interfaces that are accessible, then then you're missing that goal. So that's, I think, quite an important point. I'm just trying to create a poll here. I am curious to see what applications like lending, borrowing, liquidity pools, exchanges, etc., that people are interested in, whether it's people that have interacted in DeFi or not. So I'm just going to throw that up here, and hopefully people can see that.
Yeah, I'm sorry. I'm going to wrap up Mark and Tofi's questions on the tech side. In terms of systematic risks and mitigating hacks and stuff, it's generally these protocol are they've gone through multiple audits, and then from a financial protection perspective, as Ken mentioned earlier, there are insurance that are covering for failure in the smart contracts, and so that's that's sort of today that's the standard of de-risking the people's investment in terms of DeFi smart contracts, and the tech itself. You're correct. Like it's very difficult to regulate, but where they can regulate is in the accountability, providing audits and traceability of transaction. And so I imagine this is where the regulators are going to be coming in and taking this on, is using their traditional tools of auditing and reporting to make sure that there's accountability and particularly the AML aspect, right? Like they want to know where the funds go and where they're coming from, and that's one area that they're going to be focusing on.
Is the growth in DeFi mostly from retail, or is it more evenly split between institutional and individuals? And then there's another question which I think kind of ties in a way, is well, not really, but also need to consider pushback from existing players. The CIBCs of the world will not sit quiet. So I think I want to tie those two together a little bit, going back to Bitcoin in the early days. I think we first got, I think our group first kind of got involved in Bitcoin in 2016, but it really was a lot of crypto was a lot of almost all retail, whether it was Bitcoin or other tokens during the ICO boom. And a lot of the conversation back then in 2017 and then 2018 and then 2019 was, the institutions are coming, the institutions are coming, the institutions are coming. Like you would just always hear that. You'd always hear it, and then you would see one player get in, and it would be big news, and then a number of months would pass by, and then you would see like one or two. And now we're at a stage where as everyone knows, MicroStrategies, Tesla hold Bitcoin on their balance sheet, and you have basically all, I don't want to say all, but pretty well all kind of not all, a lot of major institutions have changed their view on Bitcoin and high profile funds, etc. So it took a long time for Bitcoin to get there, where existing players are embracing it because they realize if they don't, then it's a risk for their larger enterprise. So they now see it as a hedge, and that shift has happened, I think is pretty fair to say. And so what my view is that I think for sure there will be pushback. There is pushback already. I think Bitcoin has paved the way for DeFi in the sense that over the last really mostly over the last 10 years or so, the uptake has been huge. There's been a lot of education and now kind of acceptance. And so what we're seeing is there is the fact that people accept Bitcoin as digital gold or a digital store of value. It's less work to get them to make the jump from that into decentralized finance. So I think the push will come. my guess is that it'll be more of a condensed time period before we start to see major institutions getting into DeFi. But the growth in DeFi so far has been mostly individuals, but there has been more institutional access than like let's say during 2016 and 2017 during the kind of crypto boom back then. So I think there's a little bit more activity, but yeah, my personal take would be that there's going to be more adoption on the institutional side in a quicker period of time.
Yeah, no, so really good follow-up question, the anonymous questions on old school investors. The challenges of getting in and adopting DeFi, and that's a really good question, because if you look at DeFi in general, it's complex. Like, it's very difficult for someone to grasp, and not only that, the technology behind it. It was developed by developers essentially, so there's no consideration as to like people coming in the space and not understanding. And so I think for us personally, it's creating a really good platform that abstract all the information below, and and I mean, look at Wealthsimple, right? They've done an amazing job of simplifying investment in Canada, and I think that's really what's needed in the space, and that branding too, because people go to institution like RBC and CIBC because of the branding, right? Like they're trusted brands. And so for DeFi to happen, I think that's what's really needed in this space.
And yeah, that kind of transitions. Well, I know we're kind of going off the presentation a little bit, but yeah, like Cong said, it's all about user interface. Wealthsimple is a great example of a number of different things, but just really simplifying access to a number of different financial products and wealth management, and so these are some of the missing building blocks to DeFi getting to mass adoption. And so a lot of the questions and conversations has been around risk assessment and really understanding what is actually going on. I think a lot of the information that's out there around DeFi is like, I mean, you can sit and watch YouTube videos and read deep dive articles and white papers and still not know what is going on, or maybe that's just me, but it's there's a lot of highly detailed kind of technical, financial, and and engineering terminology. But at the end of the day, you can't. That's not going to get this to to the adoption level where my mom or dad could use it. And I think the other really the other piece is finding ways to get fiat into these systems. And so that's definitely a barrier that exists right now. I know we only have 5 minutes, so just wanting to make sure we kind of address all the questions here.
EIP 1559, I think it will reopen exponential adoption to DeFi. I mean, that's gonna make Ethereum be deflationary, which will be great for Ethereum in general. But also it'll reduce gas costs by a large margin. And right now, I know that's a big barrier for a lot of users because the transaction costs right now are quite high. So things like EIP 1559 and even just explorations into other chains that build as a side chain on Ethereum, like Matic, and those protocols going on to Matic also help. So that's, yeah, I definitely think that it'll grow DeFi adoption.
I've just, I know we're running out of time here. I just put our 3 email addresses in the chat here. So if anyone wants to, it's been a lot of good kind of questions and engagement. Please feel free to reach out to any of us. Anything that's more on the technical side, Cong or Ken would be your best bets, but feel free to reach out to any of us. And yeah, happy to engage in conversations around this. I think it's, as we said, it's super early days in the space. So it's, important for people that are kind of passionate and interested in it to engage. And so we're happy we're able to chat with you all today, and feel free to reach out at any point with any questions, or or if you just want to have a conversation around it, we're more than happy to do that. That is all from us. So we will drop off. Thanks, Craig, and thank you to Craig and his team, for Anne Marie, etc., for setting this all up. And I hope everybody has a great Tuesday.
Yeah, and thanks for everyone for making a very interactive session. So that's and I think we learned a lot today.
This is awesome, guys. Thank you.
Take care. Bye now.
Okay. Bye.